Hello friends, I'm going to talk about reconciliations today. The purpose of this video is to facilitate beginners to understand the meaning of reconciliations with examples and also to facilitate the people attending interviews to answer reconciliation related questions. Having said that, part 1 of this video talks about only meaning of reconciliation. I'm in the process of shooting more videos on this subject and request you to watch all videos to fully understand the reconciliation process. I also request you to subscribe my channel if you really think that these videos are useful to you. Okay? Let us start the meaning of reconciliation. Here, the reconciliation meaning has been split into different points. You know why I did this? To make you understand each point with examples. I did the split. The first point, let me read out these points one by one, and I'll talk about each point in different slides. Okay? The reconciliation is defined as comparison between two set of books, analyze the ending balance of the respective accounts, identify the differences, find out root cause analysis for the differences, fix those differences, and provide a documented explanation. And also, you need to ensure those errors and omissions are not repeated in future. This is what the reconciliation meaning says. Okay? I'm going to explain each point with example. Okay? Let us move on to the next slide. Here, comparison between two set of books. What do you mean by comparison between two set of books? You need to understand what do you mean by two set of books. I'll give you an example. Let us say business purchased goods from the suppliers. So what business do? Business maintains supplier account and it records all the purchases of the supplier. Similar way, supplier also maintains business book, business accounts. He will also record whatever goods sold to business in business account. Am I right? So when I am doing business and when I am purchasing goods from supplier account, I maintain a supplier account and supplier maintains my account. So when I am doing reconciliation of supplier, I need to request the supplier to provide my statement of account in his books, and I compare that statement of account with the supplier account maintained in my books of accounts. Are you clear? In simple terms, business has to compare supplier account with the statement received from the supplier. This is called comparison between two set of books. So what I'm doing here, if you see here, business books, I have supplier account. Supplier books, I have business account. What am I doing? Supplier account balance is showing 10,000 here. Supplier books, my account is showing 21,000 as a balance. This is what the comparison I am doing. So the first point says comparison between two set of books. One set of books is nothing but our books, business books, and other set of books is nothing but the supplier books. I am comparing these two books to reconcile, to understand whether balances are matching or not. Clear? Let us move on to the next. Analyze ending balance of the respective accounts. So now I am comparing supplier account in my books with the statement I received from the supplier, right? So I need to analyze the ending balance of the supplier account. In my books, if you could see, supplier account is showing only 10,000 balance. Whereas supplier books, my account is showing 21,000 is the balance. You need to understand why there is a difference. This is what we need to do, the analyze between these two balances and identify the differences. So what I did here, I am taking the ending balance of both the books and comparing why there is a difference. Clear? Let us move on to the next slide. What I did in the previous slide, I took the ending balance of supplier account in my books, ending balance of my balance in supplier books, and I analyzed. After analyzing, I need to identify the differences, right? What are those differences I identified? If you could see here, there are two purchases recorded in my books. Whereas in supplier books, if I compare, there are three transactions recorded. 5,000, 5,000 matching, that is recorded. 10,000, 10,000 recorded, no difference there. Clear? Now 6,000 is recorded here, but there is no 6,000 transaction in my books. So I identified the difference now. There is a sale recorded in supplier books, but I have not recorded that 6,000 as purchase in my books. Clear? This is one difference. The second difference is, see here, 5,000 recorded as a payment to the supplier in my books, but I don't see that 5,000 transaction here. That means I have recorded, I paid and recorded 5,000 rupees in my books, but I don't see that 5,000 rupees payment in supplier books. So after analyzing the ending balances, if I want to conclude, how do I conclude here? One sale of 6,000 in supplier books not recorded as purchase in my books. Number one. Number two, one payment made in my books not recorded by the supplier in his books. So these are the two differences I identified between these two set of books. Clear? Let me move on to the next point. I need to find out. Now I identified already two differences. After identifying the differences, I need to understand what is the root cause for the differences. What is the root cause? He would have sold 6,000 and immediately recorded that in his books of accounts as 6,000 sold. But I have not received that 6,000 rupees goods yet. So since I have not received 6,000 worth of goods, I have not recorded here. So what I am supposed to do now? Oh, supplier sold goods, but I have not received, hence I have not recorded. That is the root cause. He sold, but I have not received. Since I have not received, I have not recorded in my books. So that is one root cause. The second root cause is I made the payment to the supplier, but that amount was not received by the supplier, hence he has not recorded. That is another root cause. I made the payment, but supplier should receive it, no? I would have made the payment through check, or I would have made the payment through wire transfer, any mode of transfer I would have done. But the supplier has not received the payment. Hence, he has not recorded the transaction in his books. Because of which, you could see the difference between the ending balances here. Here 21,000, there it is showing 10,000. How do I resolve these problems? How do I fix them? I need to wait for the time. Once I receive the 6,000 worth of goods, I should make sure that I am recording that as purchase in my books. That is how I am going to fix them. Once the supplier receives the payment of this 5,000 rupees, supplier should make sure that that 5,000 is recorded in his books of accounts here. So as an accountant, what is my responsibility? I need to do the follow-up for the 6,000 rupees goods receipt. As soon as I see the goods received in my premises, I should make sure that the 6,000 is recorded in my books as purchase. Similar way, as soon as this payment is received by the supplier, he should also ensure that the payment is recorded in his books of accounts so that both the balances will match. Clear? Let us move on to next slide. Once we analyze the ending balances, identify the differences, and we also need to provide the documented explanation. What is the documented explanation? If you could see here, as per my books, my ending balance is showing 10,000. Clear? One purchase 6,000 I made. Since goods are not received, I have not recorded this transaction in my books of accounts. See here I am documenting. 10th March 2019, purchased, not accounted 6,000. I am documenting that. And I also made a payment of 5,000 rupees to the supplier. When? That is made on 31st March. But this payment was not recorded by the supplier in his books of accounts. Because of which you could see the difference of 11,000. My balance, ending balance is showing 10,000. The difference is 11,000. If I add these two, the supplier closing balance of 21,000 is matching. So this is how I need to document the differences. Once it is documented, what I'm supposed to do is I should make sure that how do I ensure these errors or omissions are not repeated in the future. As an accountant, it doesn't mean that I just prepare the reconciliation and keep quiet. Once I prepare the reconciliation, I also need to make sure that whatever omissions or errors are there between the books, I should make sure that those errors and omissions are not repeated in the future. This is how the reconciliation meaning talks about. Hope you guys are able to understand the meaning of the reconciliation. There are many things to talk about on reconciliation process. I will explain those topics in my future videos. Okay, thank you so much. If you like this video, please subscribe my channel. Thank you.